Tesla Daily's Rob Maurer is saying that he has a source that says Tesla is planning to cut production in China. Let's see if these rumors, and this is just a rumor right now, it's not confirmed or anything like that, but let's see if this rumor has any merit to it. Gordon Johnson also is listening to Tesla Daily. I would say generally, Rob from Tesla Daily is quite credible when it comes to factual information about Tesla stock.
We have an update on production, or production rumors rather. So yesterday we talked about this one that said that there was a pause in production from November 28th to December 2nd. From what I'm hearing, this is kind of a case of good news and bad news.
I follow Tesla Daily closely every single day, and you can tell that Rob is nervous and he does not want to report on this bad news. But we want to hear it. Give it to us, Rob.
From what I'm hearing, that pause did not happen. I would love to confirm that with a second source, but that is the information that I have right now. That did not happen. However, and this is sort of the bad news, and debated a little bit going back and forth on whether I wanted to report this or not, in the interest of just being as forthcoming as possible and sharing the information.
This is one thing that I do like about Rob. I don't think you ever want to watch Rob just for entertainment. It's pure information, and most may find, or many may find that quite boring, but when it is insightful, it's really good if you can sit through that presentation. And also, Rob is going to give you the bad as well as the good. It's never just the good.
So I guess the point is I don't want to contribute to spreading a rumor that may not be entirely accurate. I only have one source for this information. It's definitely possible that this information is not correct.
Even if this rumor turns out to be true later, there are many reasons why it could be happening. It could be simply that Tesla is upgrading its production lines. That's possible. And even if it is true because of, let's say, lowering demand in China, I still think it would be absolutely fine. I would still think that Tesla stock is especially hot. I mean, the good days are still ahead because Tesla, will have the cheaper $25,000 or $30,000 car for which the demand would be absolutely ridiculous.
So take it for what it's worth. I personally feel like it's pretty high credibility. So that's why I'm reporting it. But again, it is just sort of a rumor at this stage. I think it's important enough to report on it. I want to be forthcoming and transparent, as I mentioned, but yeah.
This preface is perhaps the longest one I've heard from Rob. So, there's a lot of question marks here. But still, we want the news, the rumors. We want to hear it. What is it?
So anyway, the news is that, or the report that I'm hearing is that Tesla does plan to reduce production at Giga Shanghai beginning on December 11th from the roughly 20,500 per week level that they're at right now to about 16,000 per week.
I think I smell something. It smells like a buying opportunity.
So again, take that for what it's worth. I would love to have a second source of confirmation on that. I do think that the source is pretty credible, has been credible in the past. That is a report that I've heard. So we'll see if that comes to fruition. Obviously, I guess the other context around that is that there was no supply chain reason given for that. Sometimes when there have been production reductions in the past, that has come alongside a reason.
Occasionally, I do see Rob being nervous when doing an episode, but usually not. This one, he's quite nervous. It looks to me that he really believes that is going to happen.
Reason being, production upgrades, supply chain challenges, shutdowns, whatever the case may be. In this case, I was told that there was no other context given. So, take that, read into that however you will, but obviously the concern accompanying that would be that Tesla would be potentially lowering production as a result of demand.
If this is indeed happening, Tesla is working on that cheap car.
So again, that's why I say I don't necessarily want to even be reporting this, but
yeah, you can clearly tell that Rob does not want to be reporting this. It looks like he feels that perhaps he is letting people down. But I appreciate his reporting. As a long-term investor in Tesla, though, this, to me, if that rumor does become true, to me, is just a buying opportunity. We'll dive a little bit deeper into this. There's more talk on Twitter that is happening right now as well, but let's wrap up with Rob first.
I just want to be sharing all the information that I have as best I can, and I think that's the right choice. So
I fully agree, and I appreciate Rob's reporting.
I'll try to continue to do anything that I can to validate that information as that time comes. Of course, hopefully we'll have a little bit more information on that, but that is the information that I have as of this point in time. If that does happen, we can talk more about it, but obviously that would have implications for projections for Q4, as well as for, at least heading into the first quarter of next year until we hear some reports about increases in production. So I think that would come out of the Model Y. And I think that if they reduce it on December 11th, that would likely be a reduction for the rest of the quarter of about 15,000 vehicles or so. If we assume that there's 3 weeks then at that lower production rate. So just something to factor in for this quarter in terms of the projections, if that does end up being the case. And then, of course, we would have to wait and see. This would be returning to a level of about 800,000 per year from the 1.1 million per year run rate that Shanghai was at for October. So that could threaten projected numbers for next year if that rate were to persist, which I don't have any information on that.
So right now we have some conflicting data here. If you look at the insurance discount that Tesla has been offering, it was scheduled to be cut in half starting from December 1st, which it did happen. This is for China specifically. And I said that before December, we need to pay attention to what is going on with that insurance discount, because if it is indeed cut in half and the discount is lowered, then the situation in China is probably perhaps looking all right. It was cut in half. It was not just continued at full price. This is conflicting information. What we have with Rob's reporting, if this was a demand-related issue and not a supply-related issue, or some sort of other maybe shutdown issue of some sort. I mean, there are some interesting things going on in China right now. And also, everyone got a little bit surprised by how good the numbers looked, the ones that came out from China just now, recently. So this would be a little bit, so something is not adding up here. And even if there is a demand issue, then it's much more harder for all of the competition. We can see here Evergrande's EV units suspends mass production due to lack of orders. So long term, this is not a bad thing at all, even if it does turn out to be a demand issue. It's just going to be a much more bigger problem for everyone else. Therefore, good for Tesla in the long run. Currently, only in Austin, Model Ys receive both the front and the rear gigacastings. Everywhere else, Model Ys receive just the rear gigacasting, not the front, and none of the Model 3s anywhere currently receive any gigacastings. So, one reason to stop or reduce production temporarily is if you are upgrading production lines. This, of course, long term would boost profits nicely. So for Tesla, it's really hard to lose here. If demand is slowing down right now, then this could be a good time to slow down and upgrade all of the production lines to the latest technology, which would either improve gross margins or would allow to decrease prices while still maintaining those juicy margins. My favorite cat says, I'll believe it when I see it. Morgan Stanley, by the way, expects Tesla's earnings to basically match next year's earnings to basically match earnings of this year, because they believe there's going to be slowing EV demand. Tesla, they believe, will not really make less money, it's just going to be basically the same while scaling up production. And then they project huge profits the year after that. So in the meantime, this could present many buying opportunities. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you right here. Thank you so much for watching.